Morning, and firstly, thank you for joining. And I don't have to go into full detail. Everybody knows the situation that we're in. Myself, like many of you, were paying business interruption insurance for many, many years. And when we went into lockdown back in March of last year, we thought that we were going to be covered. And we saw the big insurance companies turn their backs on us. It went to High Court. High Court said, yes, you need to pay the operators, or some of the operators. The insurance companies turned around, took it to appeal, and very, very recently the Supreme Court ruled again in favour of operators. So here we are. That didn't sit well with me. It didn't sit well with our Mayor, Andy Burnham, or the Combined Authority of Greater Manchester either. Luckily, I was very few days later by JMW solicitors and BDO accountants as well to say, look, we know there are many operators out there across our city region that will possibly need some help, some guidance. How do you claim? Can you claim? And perhaps between March and now, you've had a business that has closed, but you should have been paid out back in March. So I'm not the expert. We have got some experts here today who are going to help guide you through it. And please, as normal, there's a comment section here. Put your questions in there, and hopefully they'll be able to answer during this. But I'm going to hand you over firstly to Graham from JMW, who'll be able to start talking you through this. Thank you.
Yeah, good morning, everybody. And Sasha, thank you for that introduction. And thank you also to you inviting us to talk this morning on what definitely is a hot topic, both in the business world and indeed the legal world. You gave a quick summary as to where we've got to, which is the Supreme Court judgment delivered a few weeks back on the 15th of January. And I thought I'd start with just a bit of a gallop through in maybe a bit more detail as to how we've got to where we've got to, and some of the issues and the problems, if you like, that the courts have had to wrestle with over the last several months. As you say, most people who are in business have business interruption insurance in some way or another, or at least it appears in the policy. It's not always the case that companies, businesses have that sort of insurance, but many do, and typically it's designed, I think, to cover business losses when there is an actual physical event, damage to the property, such as a fire or a gas leak or a water damage, and conventionally that's when the business interruption bit kicks in, whereby you not only get the cost of repairing the premises, but you get compensated in a prescribed way set out in the policy to cover you for any loss of income during that period when your business is interrupted. There's also cover where there's no damage to the property, but your business is interrupted as well, and that's again can be a situation where for some reason your business is closed. There's some emergency, there's a kidnapping, terrorist attack, some event whereby the premises are forced to close, and again it loses business, and you're entitled to cover. The pandemic, which really took hold in February, March last year, was clearly unique, and it would be fair to say in some ways that it wasn't anticipated, and in many policies didn't specifically cater in a way that would have the benefit of hindsight as to what should happen in that event. That said, it was clear that when the pandemic kicked in, businesses began to suffer. The government brought in the lockdown provisions, and as you say, Sasha, everyone sort of went to their insurance policies and said, well, I assume I'm covered. I have business interruption. This is exactly what's happening to my business. Am I covered? And the insurers, maybe not surprisingly, pushed back very hard as to their views as to what the policy meant, because you must remember it is a contract between you and the insurer, and ultimately it's what the contractual words say which govern the relationship between the parties. So having had that pushback, and certainly the hospitality sector were in the vanguard of pushing the insurers to deal with these matters correctly and fairly, the Financial Conduct Authority, the FCA, took it on themselves as the regulator to bring all of the insurers into one action and bring a claim which was representative of all of the key wordings in the various policies, in the hope that that would give certainty to the industry and enable claims to be processed more quickly. And the observation on that, I would say, is that certainly the businesses who've had to wait for this judgment have been the benefactor of that process. It's moved through extremely quickly and swiftly, and I think those involved, if nothing else, should be commended for that. I think anybody who's involved in the law, and of course it's my day-to-day work, it can grind slowly and frustratingly slowly for some. Well, this has moved at a fantastic pace, I think, for the benefit of everybody. And in fact, the claim itself was issued in the High Court in June and ended up in the Supreme Court in November, with the judgment being delivered in January. And when you consider the difficult legal concepts and the breadth of the issues that the court had to consider, I think that's the legal process has done a pretty good job in that regard. What the FCA wanted to do, as I say, was to sort of bring together in sort of pots the type of policies that they felt the court needed to look at, and then ask the court to consider whether or not COVID responded properly to the policies. And how they described those three pots of types of policies was those policies that responded in circumstances where there was an infectious disease or a notifiable disease. Secondly, those policies where you were prevented from access by virtue of a government directive or order. And then thirdly, some policies had a bit of both, and they were called hybrid policies. So you sort of had infectious disease policies, prevention of access or denial of access policies, and then policies who had a bit of both. Now, the reason why infectious policies were sort of you're able to make a claim under those policies is because a lot of policies not only gave a list of infectious disease that would cover if the business was interrupted, but also said, or if a disease becomes a notifiable disease. And a notifiable disease is a recognised term under government legislation, and COVID became such a disease on the 5th of March. So from that date, if you had a policy that said, it would respond to an infectious disease or notifiable disease, then that would trigger the policy. The real issue in terms of infectious disease policies concerned the issue of whether or not how you proved the existence of COVID within the radius that your policy had to respond to. So most policies would often say you had to have that infectious disease within a mile of your premises or within 25 miles of your premises. And once the court determined that, you then had to decide, well, what losses could you recover by virtue of a pandemic which existed outside of the ring of your own policy terms? So in other words, could you take into account the whole pandemic, not just the impact of the pandemic locally? And that sort of goes towards how the court looked at losses and causation. And my co-speaker, Richard, will probably speak a little bit more about that. But to not keep you in suspense, the Supreme Court essentially gave a positive view for policyholders in that regard. In regard to the prevention of access or denial of access, that's more fact sensitive and essentially more difficult to establish, because the court sort of recognized that in those instances there probably needs to be something more local that directly impacts on the prevention of access. Now, where that might be more relevant on an individual basis is where there might be local lockdowns and the tier system, which I know is very dear to your heart, Sasha, but the tier system and the impact that may have on local businesses as opposed to national businesses is something that may be relevant when you come to look at how the policy might respond to that. So far as the hybrid policies were concerned, that related to a situation where there was a denial of access or elements came into play. And again, the courts were pretty positive on that. Again, one still has to look at the particular wording of your policy, but they did recognise when they were looking at the prevention of access situation, particularly on certain wording, that there may be instances where there's a sort of partial prevention of access or denial of access, and the Supreme Court gave a positive view on how they may view that. And the examples they gave was a restaurant, for example, who could continue to do takeaways and maybe mail order food, but couldn't serve on-site restaurant visitors. And in those circumstances, because there's a specific discrete piece of business that they are denied from carrying on, the Supreme Court said in principle they could recover for those losses for that particular business. So the fact that you're able to stay open, or the fact that you've been able to carry on trading in some way, is not an absolute bar to being able to make a recovery. So the Supreme Court and the High Court, I think they've delivered over 200 odd pages of judgment. So it still remains quite a complex judgment, and we think, as lawyers, think there's still a bit in it to sort of work our way through. But certainly there is a positive roadmap now that's been set out by the Supreme Court. And in the light of that, the FCA, I think, are doing some very good work in trying to push out information on its website, which enables people to look more closely at the type of policy they have and whether they might respond to COVID. And maybe we could pick that issue about how you make the claim and what you might do later in the talk. But that's a sort of gallop through where we've got to, and say the positive news that's come out of the Supreme Court judgment.
Fantastic, thanks, Graham. And just so anybody that's watching this knows, we've actually prepared a slide. So at the end of this, May's going to put a slide up. So if you can grab a pen, there's going to be an email address on there with contact details, so we can join the dots up between yourselves, JMW and BDO, if you want any more information. But on the back of that, I'll hand you over to Richard from BDO. Thank you.
Thanks, Asher. I'm sure many of you who do have sort of policies that will potentially give rise to payment might have a number of questions on the quantification. What I'm hoping to do is just give you an overview of how the policies sort of should respond, and equally just raise a few of the issues that are probably ongoing, really, even from the Supreme Court judgment, that you may want to sort of bear in mind. But hopefully will sort of assist with you know, a sort of practical guide. But any specific questions anyone has, very happy to take those too. So, you know, in general, a business interruption policy is sort of seeking to put you back into the position you otherwise would have been, but for effectively the insured peril. And as Graham sort of mentioned, in this instance, we're looking at specific policy extensions relating to diseases or non-damage denial of access, or what's otherwise termed as hybrid clauses. Now, business interruption is often sort of seen as being, you know, quite complex, which it can be, but it can also be distilled down into sort of manageable parts for people to sort of get their heads around. So ultimately, what we're looking at is, first of all, we sort of have a loss of revenue, or what we might also call a loss of gross profit. What we're looking to do here is compare the expected sales of a business, what would have happened had it not been for what you've insured against, versus what you have actually achieved. Now, in this instance, the courts have been very helpful in giving guidance as to how we look at this. For the disease clauses, this could potentially be triggered as soon as there was a presence of the disease within the vicinity, where the policy refers to vicinity, or for some policies, potentially just where it was present in the UK. And the court effectively held that the policy should be triggered by a single occurrence of a disease, and that single occurrence is a concurrent cause of all the other impacts of the pandemic, especially the government intervention. But effectively, this means that when we are looking for an expected sales position, we need to take out all the impacts of COVID-19 and all the government measures that flowed from that. We're effectively trying to look at a business as usual position. Now, to that, we still need to be applying general trends of the business. So if your business was growing, you want to show that level of growth over the last few years. we had a very good summer. So from a hospitality perspective, again, if you can demonstrate that, good weather, hot weather brings people out more into the business, again, that's something that can be factored into the normal trends, non-COVID-19, that we would look at. Now, in relation to the denial of access, prevention of access, and the hybrid clauses, they're triggered not only by the disease, but also by government action, which gives rise to a closure to the premises. So what's deemed the insured peril is all aspects of that. It's the disease and the closure and the authority action. Now, what that means is the period for which the insured peril is in action is just while you are closed. So it's maybe a slightly shorter period than you might look at for the disease clause. So if we take that, a business was forced to close when Boris Johnson told you to, sort of towards the end of March, and you reopened sort of beginning of July, which was sort of quite normal. During that period of time, you just want to be looking maybe what you did last year, but business as usual, what would you have done within that period? It gets slightly more complicated upon reopening. The loss still needs to be linked back to the period when all aspects of the insured peril, which included the closure, were in action. But the scenario that we're looking at is an expected sales versus an actual sales. So in your expected position on that first day of reopening, you're going to be at 100% sales. Instead, you've been closed for months, you're at 0% sales. It will take time for you to recover back to position that you would have otherwise have been if you'd been open for the last 3 or 4 months. That being said, it may be that you have to take account of the conditions as they were when you're reopening. COVID-19 comes back into play. Now, this is an area where we are seeing different interpretations of this. Some people are looking to claim continuing that but for COVID. I imagine insurers are trying to bring in the impact of COVID after that reopening. But in principle, you can claim a tail once you've reopened of an ongoing impact, as long as you can link it back to the insured peril. And you may have to have some discussions and negotiations with insurers around exactly what you might be able to claim. As Graham also mentioned, where parts of the business, discrete parts of the business, maybe still cannot be used, that becomes a sort of separate claim in itself. And if you can identify the revenue of the business, the performance of the business associated with that discrete part that continues to have restrictions placed on it, that element of the loss can continue. Now, the loss in principle can continue. Your policy schedule will state what's known as a maximum indemnity period. Now, there is a global maximum indemnity period for your whole policy, but we do know that certain of these extensions had shorter indemnity periods, sometimes only 3 months. And if that's the case, then it may only be that 3-month period you can claim. It may be another issue, especially for those with disease cover, whether or not they can claim another loss after that 3 months because there was another occurrence of disease. Again, I believe that will be one for the legal team. Equally, when it comes to denial of access, does lockdown 2, does lockdown 3, does that give rise to new claims? What is very important for those is they still must sit within your policy period. So there's 1 year over which your policy runs to be able to claim it. So if, for example, your policy period only ran till August 2020, obviously you won't be able to then claim an impact from the shutdown in November 2020. So it's worth looking at your policy period and working how many shutdowns sort of fitted within that. Now, most policies will also, some will look at loss of revenue, and then you must deduct savings from that. So you can't just have your lost revenue, you've got to give your insurers benefit for any costs that have reduced in consequence of the loss. Now, part of that gets factored into what's called a rate of gross profit. This is taking account of your directly variable costs. Now, it might be for hospitality, we're really looking at your direct food and beverage costs. That might be a sort of rate of gross profit in the sort of 60 to 70%. Whatever you do, don't put any kind of labour into that calculation. You're only looking at your directly variable costs. Everything else will be looked at down below in what will be termed the sort of fixed cost savings aspect. Now, before we sort of get on to that point as well, if to an extent you've also incurred additional costs to try and continue your business, so this might be efforts to allow social distancing, all those sort of extra efforts you've had to put in and costs you've incurred, they may well be able to be claimed as increased costs of working. So it's worth separately identifying all those extra costs that you've incurred to try to be able to operate in that sort of COVID environment. Now, in relation to savings, some of these will be, maybe your lights. If you haven't got your lights on for a period, you might have saved some rent. Unfortunately, you may have to give insurers some credit for that because that cost has decreased from your perspective. Now, where there is still an area of contention is in relation to government assistance. The ABI, the Association of British Insurers, was quite clear that certain categories of grant should not be deducted from insurance claims. But I think there are two elements that are potentially quite large in relation to especially hospitality claims. That's in relation to the rates rebate that was given and also furlough. Now, this is a very difficult situation from a business perspective. That was a saving, and if that has then reduced what insurers have to pay, insurers effectively have got the benefit of that government assistance. But of course, if insurers don't take that benefit, there is potentially the argument of a windfall profit for those businesses. So it's a difficult argument, and it's certainly going to be one that is being very, very closely looked at and will probably turn on individual wordings unless there is more of an industry approach to this. I just want to raise one in relation to furlough, because there are also some technical points around that which may assist discussions around it. The correct method of accounting for furlough is not to offset this against your wage costs. So in your accounts, you should be recognising the wage costs you paid, and you should recognise the furlough payment as other income, and that would be per financial reporting standards. Now that becomes relevant because by already having your wage costs there's no saving. There's no saving associated with furlough. It falls to be considered as an item of income. Now, many policies that we are seeing have a very specific definition of income. It's trading income based on the business as set out in your schedule. So it may well be that your schedule says that you are a restaurant, and therefore income is defined as income from the restaurant, at which point furlough may not be considered income from the restaurant. Now, these are arguments that are being put forward. Whether or not these are going to be acceptable is a whole different question. But, there is some contention over insurers' choice to deduct furlough payments from insurance claims. And so, you should take probably some advice from either your broker or from legal teams as to whether or not that argument may run for your policy. Just a sort of final piece, what we're seeing a lot at the moment is that insurers are seeking to almost have first run at the calculation. They are asking for generic sets of information, and they may be looking to do relatively simple calculations in an attempt, to be fair, to try and get monies out to their policyholders. Those requests should be coming through to you. Now, within your policy, there will be usually assistance for accountants' fees. Now that specifically just assists you with preparing the documentation that your insurer has requested. That is slightly different to what might be called claims preparation fees, which tend to be in larger, more corporate policies, where actually insurers will also pay for someone to assist you to prepare your claim. Now, you may have that in a policy, and if you do, that's very helpful. You can get somebody to assist you and it'll be covered on your policy. But at the very least, you're likely to have some assistance to get your accountant to just help you pull the information together that insurers are asking for. And we would suggest that you give that information to your insurers They will come back to you with a view, a calculation of what your loss is. You can then ask for that calculation at the very least as a payment on account, get some money to you straight away. But then that is the time to then have a look at that calculation, the assumption that it's based on, and say, okay, is that relevant to me? Have they taken account of my growth? How much have they taken off in savings? What savings have they taken? What indemnity period have they taken? So you can let your insurers maybe do some of the legwork for the time being, and then once that comes back, it may be time to look at it more closely and work out whether that's a fair representation of the loss you have suffered. So I hope that gives a reasonable overview. Again, very happy to answer some questions, possibly at the end, possibly now. I'll leave that open to Sasha.
Thanks, Richard. I appreciate that. I've actually got a couple of questions, and then there's one question in the meeting chat. And again, just to remind anyone, if you want to put any questions up, I can see them. Just a question from someone that's in the group actually just texted me, and they have a restaurant, and they've been told they don't have a claim because COVID-19 isn't on their list of contagious diseases in the business interruption clause. And I know this is quite common. So I'll throw that up to either of you actually. What's your thoughts on that?
Yeah, shall I pick that up, Richard?
Sure.
Yeah, so the, as I say, there's so many different policies that's the problem first off. But some policies have what I'd call a prescriptive list of diseases which would trigger the policy if that particular disease occurred. And where there is a prescriptive list, then it is very, very, very unlikely, and in fact I think it's safe to say won't be the case, that COVID would be on that list. Okay, where COVID does appear on the list is by virtue of the fact that a lot of policies say that if an infectious disease which isn't on the list but becomes a notifiable disease under the health regulations, then it's almost as if it gets added to the said list, which would trigger the policy. So if the person asking the question, obviously we've got to be careful we're not giving sort of advice which they should rely on, but just giving an answer to the question. But if therefore it's not one that extends the list by reference to this notifiable disease concept, then that's probably the reason why he doesn't have cover, even though there's probably a list of 30 infectious diseases which he looks at, but none of them would be COVID-19 or the actual biological definition of it. But if you want to add anything to that, Richard?
No, I'd agree with that, Graham. That sort of cover tends to be called specified diseases, because then they are specified diseases. The cover, which is a sort of wider infectious diseases, tends to have a broader definition. Yeah.
Okay, there is a question from Bethan, but just another question from me, sorry. So let's say we're thrown back into the tier system, and you know my thoughts on the tier system. It would take up the rest of the hour, so I'm not even going to start on that. But if we're put back into the tier system, we are told that we can only operate as a restaurant or a food-led pub at 50%, and we now know we have insurance. Does that mean we can potentially look at the loss of profit between the operating at 50% and operating at 100%?
Yeah, maybe if I tee this one up for you, Richard. Yeah, so what I think one of the issues that comes out of that question, Sasha, is whether or not the incident, the trigger that gives rise to the claim under the policy is a one-off event, or are there a number of events which enable a claim to be made every time a different guidance or lockdown is provided. And as I say, I think probably that's something Richard's looking at quite a bit by reference to quantum issues. So it might be worth you sort of commenting on that, Richard.
Yeah, no, absolutely. It's well, you have disease cover. Disease cover is going to be far, far broader, because you are just looking for disease. You know, how exactly everyone's reacted to it and when becomes less relevant. I'd say that, you know, there's only a small proportion of people will have that. If we're looking at prevention of access, or also the hybrid clauses which require an inability to use, it becomes much more challenging, where you are hindered from using. You know, you can use your premises, but you can only use part of it. You know, the High Court and the Supreme Court weren't very helpful in relation to the impact of social distancing as being something that is going to have an impact. So, you know, you have to be really careful, and it really requires a prevention of access. Now, you know, areas of that which could be of interest is, you know, we went into the tier system and bars were required to be closed at 10 p.m. And, you know, that has, you know, a very significant impact on, you know, the peak time at weekends of revenue. And maybe there could be then an argument to say, well, yeah, you're prevented partly from accessing your premises for a period of time. And there's a discrete, you know, part of the business that you can identify. But, you know, insurers, again, are challenging anything where you are able to have some access, certainly usable access to your premises. You know, it will make the trigger in the first place difficult in relation to those specific clauses. So the tier system is a difficult one for certainly some of the policies.
Okay, thank you for that, Richard. Helpful. So a couple of questions have come in, and then I'll move on to James. I notice we're running out of time. So the first one, and this is a good one actually, because obviously with Park Life, I'm in the events industry, but someone, Bethan's got an events business, and obviously mass gatherings are not allowed, so the events can't take place. Would the insurance cover them for that?
Very much depends on their insurance cover. So for events businesses, realistically, you're going to need disease cover, because if you don't have disease cover, the cover is going to be linked to a set of premises, which is likely to be your offices. Now, you know, the prevention of access to the offices was unlikely to be the impact on that events company. That being said, you know, so long as there is some impact of not being able to use your premises on being able to use, you know, be able to put on events, there could be something there. But it's likely that it would need sort of, you know, discrete cancellation insurance, or, you know, a wider disease cover to cover effectively something that's away from your premises. And again, the Supreme Court was clear that where, you know, for the denial of access and the hybrid clauses, where the losses are incurred by something not related to access, then cover won't be there.
Okay, thanks, Richard. Really interesting one actually from Carl. So my insurance policy does have infectious disease cover in the policy, but my insurance company is saying I can only claim for 3 months, as I renewed the policy after the first lockdown and they took out the wording for infectious diseases. Is there anything they can do about the ongoing pandemic?
Yeah, so probably we both of us can answer that. Shall I speak, Richard?
Either of you.
Yeah, so I think as Richard mentioned in his talk, obviously when a policy period comes to an end, it gives the insurer an opportunity to rewrite the terms of the policy. So if I've understood the question correctly, if he's had infectious disease cover, let's say, during the period of the policy that could burst the pandemic, once it renewed, then it's likely that cover will be taken away from him under the new terms of the policy. And I think that's probably I think, Sasha, from the question.
Yeah, we've seen a number of policies with that 3-month period. It would need the first policy period to a second period to jump into that same policy year. I think if you've renewed within that 3 months, then unfortunately, and we have seen it fairly widespread, is that once insurers got to grips with this, they put some fairly blunt restrictions on any kind of COVID-related losses.
Just an observation on that, Sasha, which maybe we just haven't mentioned, but it did, I think, demonstrate how hard, if you like, the Supreme Court did to give the relief that business policyholders wanted, is that a lot of policies had a sort of catch-all in the back of the policy that said, and we're not going to cover you for a pandemic. So on the one hand, they're saying you've got cover for a notifiable disease, infectious disease, but not for a pandemic. And although they took a little bit of time to explain that, they essentially said you can't, insurance companies can't give with one hand and take with the other. And they sort of said, no, we're not having that. So to the extent that where there was an attempt to exclude in the back of a policy through reference to a pandemic, the Supreme Court said you're not having that. And obviously that means that people can still proceed with claims in the way that we've described this morning.
Great. Thanks, Graham. I know there are a couple more questions actually in the chat that I will get to if we've got time, but I'd like to pass you on to James now from JMW, who can talk about his section. Thank you.
Hi, so I'm just going to talk a little bit about business insurance claims and the interplay that insolvency, a business's insolvency might have in relation to that. There's two things really. First of all, the period of time in which the company is under the control of the directors, and there might be a question about insolvency, and then after the company has gone into an insolvency process. So I'll cover both of those. I mean, right now is obviously quite a difficult time, probably an understatement. The Office of National Statistics has estimated in October that 63% of UK businesses are at risk of insolvency, and up to 60% of those that have taken bounce back loans are at risk of default on them. So that just puts it into context a little bit and highlights that whatever your business is and whatever you think the state of it is, it's worth having a mind to a business's solvency position when you're thinking about this business insurance claim. So there's a lot of government support out there in terms of loans, CBILS. There are other support measures such as restrictions on rent enforcement and debt enforcement in terms of landlord repossession and creditor winding up petitions. Those things have assisted with cash flow and taken away creditor pressure. But there can remain balance sheet issues that can affect a business, and balance sheet solvency is one of the tests of solvency. So even though you might think that the government measures have helped you on a cash flow basis, you also need to think about insolvency on a balance sheet basis as well. So whenever there are questions about solvency, it's worth considering a director's duties that arise at the time of questionable solvency. And what we mean by this is that where a future liquidator or administrator might look at the actions, or really importantly, the non-actions of a director during this period. And they've got powers to look at transactions that have taken place. They've got powers to overturn dividends that have been paid at a time of insolvency. And they've also got powers to look into whether a director has complied with his duties to a company. And it's on that latter point that I just want to pick up on in relation to business insurance. So in relation to business insurance, it means that the recovery of that insurance and looking into the claim properly are important for the following two key reasons. Firstly, as a director, you can be personally liable if you fail to investigate the business insurance claim properly, and/or if you fail to give notification to your insurer of an intention to bring a claim. So really what we're saying there is that as a director, it's incumbent on you to act in the interests of your shareholders like normal, and possibly in relation to your creditors, by taking steps to preserve a company's assets. Now, quite often in insurance, well, in most insurance policies, and not just in relation to business insurance claims, but just generally, there is a requirement that you give notice to the insurer as soon as reasonably practicable, or as soon as reasonable after becoming aware of the claim. So that means even though you've got a policy with a business insurance claim in, you've got all the losses, so everything that Graham has talked about, everything that Richard's talked about, all that is done and fine. If you don't give notice, you can still lose the right to claim. So you have to think about the claim, then you have to think about taking action. And if you do not do those things, it is possible, and I have done this in the past, where a liquidator will look to the director and say, you should have given notice. A reasonable, normal acting director would have given notice, and that your failure to do so has caused the company to lose a claim of, say, £1 million, and they can sue you personally for that loss. So it just to put that in context. The second important reason for considering business insurance is that the actual recovery of the insurance it is an asset of the company. So it speaks to that bigger picture of whether a company is insolvent or not. You know, if you've got an insurance claim coming in at £1 million, that's going to have an impact on your question as to whether a company is balance sheet insolvent or not. And just thinking about that balance sheet solvency, the impact of the policy wording is going to affect that. So if you've got very clear wording, and we think, you know, on the basis of legal advice that you're going to get a quick payout because it's quite clear, that's going to influence your decisions as a director in the context of how insolvent or whether you think you get the money in time to be able to meet debts as they fall due. If you've got a really complicated claim and the wording isn't clear, that's, you know, it's going to impact on time to money questions. Just finally on the director's duty point, it's very common for businesses to have granted debentures to their banks, and that means, you know, it's very common in those debentures for there to be an assignment of insurance policies. And what that speaks to is the actual benefit of the BI insurance claim probably falls under that security in one way or another. So when you get into the meat of the insurance claim, it probably is worth considering the security position of the company, and perhaps even discussing the claim and its outcome with that secured lender. Just importantly, in relation to your duties, if you do receive monies from your insurer and they do fall under certain classes of security, and the monies are paid otherwise than in accordance with that security, possibly at a time when there's a default, again, that could link back to a personal liability on you as a director. So just finally, I won't talk very long, but it's just worth mentioning that if a company does go into a formal insolvency process like liquidation or administration, the BI insurance claim survives. The claim is just pursued by the administrator or liquidator, and that can mean, if the claim is quite substantial, it can mean that enough money comes in to pay creditors in full. It might mean that enough money comes in to pay a return to shareholders as well. So it's not the end of the story if a company goes into liquidation. You should cooperate with the liquidator and help them to quantify losses and pursue that insurance claim. I'm happy to answer any questions we've got on that.
Brilliant, thank you, James. And just as a reminder again, you know, at the end of this, do grab a pen, because there's a slide where the contact details for BDO and J&W are going to appear. But there are three questions actually that have appeared. First one from Sarah: will there be a claim by date? You know, is there a date they've got to claim by? And that's to either Graham or Richard.
You're
on mute there, Graham.
Yeah, apologies, Sasha, thank you. I thought I'd get through without that phrase being slung at me, so failed. Hopefully I'm coming through. So the answer is there isn't a formal date. The policy will tell you when and how you should be making the claim. And so my advice to anybody who hasn't made a claim is they really need to get on and at least lodge a claim with the insurance company, either through the broker if they use a broker, or directly if they have insurance direct. So I really think if in doubt, make the claim. I think it would be quite dangerous, if you like, and I think politically insensitive if insurers began to take points with particularly smaller businesses as for failure to make a claim in accordance with the terms of the policy. But that's an issue that may arise depending on the circumstances of a particular case.
Brilliant, thank you, Graham. Another question from Bob, and I hope I'm going to pronounce this correctly. So his insurance firm is Eccles Istical. I don't know if that's right or not.
Yeah, it's not. Just to say, Sasha, your northern roots are showing up with the Eccles reference. It's ecclesiastical. Maybe your religious roots need to come to the fore.
I'll be honest, I prefer my version.
I do.
They were left off the original appeal to the Supreme Court. So what happens there?
Richard, Richard?
Yeah, I mean, for the time being, the findings of the High Court will still stand for the ecclesiastical policy. I was just trying to pull this one up, but I think this may be related to
prevention of access, Richard.
Yeah, I think it may also be something related to disease at the premises, and this is certainly a live issue, because even though it wasn't considered by the Supreme Court, what the Supreme Court said was that the principles that it came up with in relation to its rationale for the areas of appeal may also apply to previous policies. And, you know, there are other policies which looked unlikely to give rise to sort of cover, because certain ones talked about very localized events, but actually the rationale of the Supreme Court verdict sort of maybe opens some questions up on there. But that's not to say that currently the judgment as per the High Court will still stand for them. But there may be grounds if somebody was to just probably another legal issue for Graham.
Yeah, can I just add to that, Richard? Yeah. So yeah, I think in the FCA guidance they have said, I don't know if I can be heard at the minute. Yeah, sorry. I think the FCA has said that some parts of the Supreme Court judgment may be relevant to that type of policy, even though, as Richard says, the policy itself wasn't before the Supreme Court. So I think prudence would suggest it would be worth revisiting that, even though you're probably starting off, 1-0 down, as it were.
Okay, that sounds slightly positive. A question from Philip, which I'm not sure I fully understand. I might get this wrong. So Philip's a printer. Actually, in first lockdown, did all right in printing stickers and posters and things like that for his clients. But 75% of his clients are in hospitality. Obviously, they've disappeared. Would he have a claim?
If he has the right cover, he potentially has a claim. And again, what this comes down to is we need to come up with effectively an expected position of sales to compare against your actual sales. If this was a disease cover, then your expected sales has to look at your non-COVID sales. Now, what I believe Philip is suggesting is that at least for part of that period, he maybe had a small benefit from assisting hospitality with various bits and pieces. You would look at all of your losses over whatever indemnity period you are allowed. And yes, you may give a small credit to insurers where you have exceeded the sales that you might otherwise have expected to do, but obviously that will be offset against all the losses that you have suffered in the other months. So it would always come down to how long your policy says you can claim for, but within that period, you just take a sort of non-COVID expected position and compare that against actual. And yes, if there's the odd month where you have done better, that will sort of get sort of offset, but it certainly doesn't stop you from claiming your other losses, so long as the rest of the policy allows you to claim during that period. Great.
Okay. Do you know what? I think we're about to. Sorry, Richard. Did you want to come back?
Well, I was just going to say I'm just trying to have a look at the ecclesiastical Zurich question. It might turn on the principles of the terminology incident. Now, there was effectively, there's a number of policies, the non-damage prevention of access, which required an incident within quite a small area, about a mile, was held in the High Court to say does not cover, because it was looking at a very localized incident. Now, the Supreme Court principles would be that, well, it doesn't really matter as long as there is one occurrence of disease within a mile, then it potentially could trigger. The challenge here is the High Court referenced two parts, and one part was also the word incident. And in their view, incident, an occurrence of a disease, wasn't an incident. And then because of the other part, I think it wasn't then appealed. Given the other part has disappeared, it doesn't matter about it being localized. As long as there is something in a mile, you've got the wider impact of the pandemic to take out. It all turns on that one word of incident. And there may be legal recourse to challenge then that view of the High Court, given what the Supreme Court has said, if you can get past incident. So I think incident is still a blocker at the moment, but it could be one that gets looked at very closely.
Great, thank you, Richard. Incredibly, we're coming to the end of the hour session. I know a few people have already messaged actually in the meeting that there's been a lot to take in, and May said that she will email out the recording of the webinar. Again, May will also send out the contact details for JMW and BDO as well. But I just wanted to personally, on behalf of myself, the Nighttime Economy Office at the Combined Authority and Andy Burnham, just thank JMW and BDO for actually stepping forward. You know, our sector has been absolutely decimated, and for some people, you know, the news coming out of the Supreme Court that perhaps there is some light at the end of the tunnel with a claim was fantastic news for many, not just in Greater Manchester, but across the whole of the UK. But so thank you, Graham. Thank you, Richard. Thank you, James, and everybody else who's helped in the background pull this together. It's really, really is much appreciated. And onwards. So thank you.
Thank you.
Cheers.